The Monetary Policy Committee, MPC of the Bank of Namibia, ended its two-day meeting yesterday to decide the appropriate monetary policy stance to be implemented over the next 2 months. And I'm delighted to share the outcome of that. To continue safeguarding the peg between the Namibian dollar and the South African rand and anchoring inflation expectations while simultaneously supporting this domestic economy, the MPC decided to increase the Repo rate by 50 basis points to 7.75% with immediate effect. This decision was taken following a comprehensive review of global, regional, and domestic economic developments. Let's consider the domestic developments that informed this decision. Domestic economic activity improved during the first 4 months of 2023. Inflation remained elevated but receded somewhat from its earlier peak, while the growth in private sector credit extension, PSCE, remained weak. The merchandise trade deficit narrowed and the stock of international reserves remained sufficient to support the currency peg and meet the country's international financial obligations. So let's dive into the domestic economic activity. We see an improvement in the domestic economic activity since the last MPC meeting. The improvement was observed mainly in sectors such as mining, manufacturing, wholesale and retail trade, communication, and tourism. Activity in the construction sector, however, remains subdued due to the continued contraction in private sector works, although there is a welcome increase in government construction. Going forward, real GDP growth is projected to slow down to 3% in 2023 from 4.6% in 2022 on account of slower growth in the primary and secondary industries. Risk to the domestic economic outlook emanating from both external and internal factors remain broadly unchanged. External factors include weakening global economic activity, tightening of monetary policy globally, and persistent inflation. Internal risks include water supply interruptions, particularly in the coastal towns, the looming drought, and general infrastructure constraints. Inflation in Namibia remained elevated relative to the previous MPC meeting. Namibia's average inflation rate rose to 6.8% during the first 5 months of 2023, compared to the 4.9% during the corresponding period in 2022. The rise in the average consumer prices was predominantly driven by food and housing price inflation. Similarly, on a monthly basis, inflation increased to 6.3% in May from 6.1% in the previous month. Going forward, overall inflation is projected to average 6.1% in 2023, remaining unchanged from the last MPC meeting. PSC growth slowed from 3.1% in February to 2.6% in April 2023. This is a result of subdued uptake of credit by businesses. The dwindling annual growth continued to be mostly observed in the mortgage loans and other loans and advances in overdrafts credit categories. Growth in credit extended to households, however, remained relatively stable. On the external front, Namibia's trade deficit narrowed to 19.9% to 9.4 billion Namibian dollars during the first 4 months of 2023 compared to the same period in 2022. The improved trade balance was on account of higher export earnings from uranium, diamonds, gold and fish, reflecting a rise in volumes exported, as well as the depreciation of the Namibia rand-dollar exchange rate. Imports also rose with the first 4 months of 2023 relative to the same period in 2022, but at a slower pace relative to exports. As at the end of May 2023, the stock of international reserves decreased to $49.7 billion Namibian dollars from $51.8 billion Namibian dollars at the end of April 2023. This decrease in the level of international reserves was partly on account of net commercial bank outflows as a result of portfolio investments and import payments. Nevertheless, at this level, the stock of international reserves remains sufficient to support the currency peg between the Namibian dollar and the South African rand and meet the country's international financial obligations. The current level is estimated to cover 5.2 months of imports. Let's consider the incoming data from the global environment that we have considered. Preliminary data indicates that global economic activity recovered slightly during the first quarter of 2023. Inflation in most monitored advanced economies and emerging market and developing economies moderated but remain above target levels. Monetary policy stances were generally mixed. Preliminary data shows a slight improvement in global economic activity during the first quarter of 2023 compared to the last quarter of 2022. The recovery was mainly shaped by strong private consumer spending in the US and the reopening of the Chinese economy following the easing of the COVID-19 restrictions. Additionally, improved activity in Japan, India and Brazil contributed to the observed recovery. Going forward, the World Bank has recently projected global growth to moderate significantly to 2.1% in 2023 from an estimated 3.1% in 2022. Key downside risks to the global economic outlook include the possible escalation of geopolitical tensions, tighter financial conditions, and the persistent inflation. Other key risks are the increased uncertainty from the recent financial sector turmoil and growing geopolitical fragmentation. Since the last MPC meeting, the prices of most monitored commodities declined both on a monthly and annual basis. The price of copper and zinc fell monthly and yearly in May 2023, due mainly to weaker manufacturing activity in China, sluggish global demand, and high stock levels. Likewise, the price of Brent crude oil declined in May as global demand remained weak. Food prices in US dollar terms were lower than a year earlier. The gold price inched higher year on year on the back of safe haven purchases, but moderated on a monthly basis. Diamond prices declined during the review period as high interest rates continue to weigh down on disposable income in key markets. Going forward, diamond prices are expected to remain weak in 2023, arising from lackluster global consumer demand. On the contrary, uranium prices increased and they are expected to continue trending upwards due to increased demand to clean energy. Most monitored global equity markets recorded gains in May 2023, defying expectations surrounding the US debt standoff and gloomy global economic outlook. In addition, bond yields increased in both advanced economies and emerging markets and developing economies in May 2023, with a deal reached setting the possibility of US debt default aside, yield most recently inched lower. Since the last MPC meeting, inflationary pressures in the monitored economies generally continued to moderate but remain elevated. Among the advanced economies, inflation eased in the US, United Kingdom and the Euro area, while it increased in Japan. Likewise, inflation moderated in most of the key monitored emerging markets and developing economies, except for Russia and China, where it edged up slightly. Going forward, global inflation is expected to remain sticky despite moderating somewhat. Consistent with the moderation in inflation, a number of monitored central banks kept the policy rates unchanged at the latest monetary policy meetings. However, the US Federal Reserve, the Bank of England, the European Central Bank, as well as the South African Reserve Bank, raised rates since the last MPC meeting. Against this background, the MPC decided to increase the Repo rate by 50 basis points to 7.75%. The increase in the Repo rate effectively brings the prime lending rate to 11.50%. The decision is deemed appropriate to safeguard the one-to-one link between the Namibian dollar and the South African rand. It's simultaneously aimed at further containing inflationary pressures, stemming the associated second-round effects, and anchoring inflation expectations. Thank you for listening.